Something very interesting happened on SPX today and also yesterday. You could see here, well, I showed before, we have another ascending wedge. This is the second one compared to the larger one that we had previously between October and early December. But this one, what's interesting about it is we had a breakout up here on February 2nd. However, it ended up being a fake breakout because the following day price gapped down. It retested the top resistance of this trend line here, and it was unable to reclaim above, so it continued lower. And another interesting part as well is yesterday on the 7th, we had a interview with Jerome Powell, and it actually ended up having the market pump up. However, we never were able to get back above this trend line, which is a crucial thing because today we saw a gap down and then some weakness to touch the lower end of the trend line. This is pretty crucial because now we saw that there are a lot of sellers, at least on this trend line and above this trend line, around this range, roughly the 4,150 to 4,180-ish range. There are a lot more sellers around that area, and price is having a very difficult time getting above that, which means the next route for it is to test and see if there are buyers at lower ends around this like 4,100 level, which is very interesting because if you look over here, yes, there are a lot of lines on this chart. However, just based on the channel that we have from up here, this yellow line and then also this yellow line, as well as the boxes that I have in here, which are forms of demand zones, you can see here we've been trading in between both where it's been rejected multiple times from this other chart from over here, as well as the support level around that 4,100 and slightly below that. So the fact we broke below the two yellow lines I just showed you right here, also the fact that we are back back into this ascending wedge, that is after having a fake breakout, that will probably mean that we will retest this demand zone, and this will give us a very good sense on if bulls are strong enough to keep this rally alive and continue a little bit higher, at least in the short term, or if things are ready to go downhill and we start to see some more substantial downside. So definitely watch this range right here. This is between roughly 4,050 and 4,100. It's about a 50-point range. That's very crucial because if this range breaks, especially the bottom of this box as well as this yellow line, which you can drag back. This is a line I've mentioned in many other videos before, which by the way, subscribe below if you are new here. We do these videos every single Wednesday and Sunday, but this is the one that connects to the 2020 crash low, that trend line I just showed you there, the yellow one. So bulls definitely want to see us stay above this box first of all, but then especially this yellow trend line and bottom of this box, because that can mean more of a bid for further upside or at least chop in this range above. Because otherwise, if we fall back under this line as well as the box, then that would mean that this upside that we've had throughout February above both of those levels, that would mean that this is a fake out as well, very similar to how we had a fake out above here. And when you have fake outs, that tends to mean price will fall harder in the opposite direction if it does confirm a breakdown from that. So I am watching for this because last time we did have quite a bit of a breakdown from this ascending wedge back here. We also had another fake breakout up here. We actually had 3 days that we stayed above. We still were below the key trend line. You can see here the downward trend line from all-time highs. This one over here, the yellow one, still we're below that, which is slightly different than right now where we actually broke back above it. However, it still applies the same exact principle here. We had a fake breakout, fell back under, retested it one more time in the wedge, and then continued a lot further down. So I am watching for something like that around this range, and it'll be very important to continue to watch this box that I have here as well as trend line to understand potential risk. Additionally, if you guys have been watching our videos, especially from the past 1 to 2 weeks so far, I've referenced a lot into dark pools and how I'd like to see more and more premium, especially in signature dark pool prints as we continue up, because I would see that as a sign of distribution from big money before a larger move down, because obviously I have my macro thesis of a lot more bearishness to come in the market. And actually, we have seen a lot more premium hitting the tape in the dark pools, at least signature dark pool prints. Today, we saw $2.9 billion worth of premium at the 415.20 level, which if we mark over here on a chart, you can see this ended up being close to or around the high of day, at least in this range over here. So this ended up being the high of day from yesterday. Remember, signature prints are delayed by 24 hours, executed on European exchanges. That's just how the rule works there. So we can see that there was very likely a heavy seller around this 415 level from up here. And then also, if you look back to yesterday on Tuesday, you can also see that we had a lot here. We had 2.1 billion. So this is a pretty decent amount. I typically characterize them as if you have over 3 billion, that's definitely something that's pretty rare to see. But anything in the 2 to 3 billion range is about a moderate level, and that's certainly eye-opening. It's not like it's under 1 billion, because that would be basically nothing. We saw that on Monday, it was only 800 million, but 2.1 billion at the 409 level. And then also, as we saw from today, we saw the 2.9 billion worth of premium definitely starting to pick up, especially at a consistent rate. And if you actually look back on Friday, you can see here we had that over 3 billion premium. We had the 3.2 billion order for the 416.72 level, which is interesting as well. As you can see from up here, that 416.72 level, roughly around this range, we have two pretty substantial sell orders around this 415 to 416 range. So there's definitely a large seller up here. We've been chopping within this range now for a few days, but this is definitely something that bulls, at least if you're bullish and you want to see continuation, you need to clear this level. This is a pretty substantial range of distribution up here with big money backing it, and it's acted as a very hard resistance thus far, and price is just going to need a lot of strength to get above these levels because there's a large seller sitting up here. So definitely mark these levels on your charts. They're going to be very insightful for the future. And as of now, there is a whale that's sitting up here and they are selling, and you guys just need to be aware of that. I also briefly want to go over QQQ here. We saw something pretty interesting yesterday. We saw a lot of sweepers hit the tape before the close. This was at 3:17 Eastern, so about 45 minutes before the closing bell. You can see here, this is an interesting concept where you see a lot of these, where you don't just see one or two unusual orders, you see a ton of them back to back to back to back, all sweep orders, as well as they're out the money and relatively close in expiration, just a few months out. So this was definitely something that set off alarm bells. And what's interesting about this is they bought these puts at the 308 level. And this was yesterday, remember, right before the bell. You can see throughout today, these actually ended up being in the money. They bought these right around this range, around this 308 range, and we ended up selling off quite a bit today and closed near the lows of today. So these wheels are very much in the green. And basically just what I wanted to share with this is look for this type of action in terms of flow. When you see a lot of these unusual orders hitting the tape one after the other, that can give you a lot more confirmation that they may be more likely to be profitable at the end of the day. There's a lot of confidence going into these prints. As you can see here, just seeing a lot of these prints hit the tape all at once. So when you have a lot of these clumped together, it can give a lot of insight on a setup having a higher probability of success. So just wanted to share that as a tip. And the last thing I'd like to note here is the VVIX. This is volatility of the volatility. So the VIX is just volatility. This is actually volatility of volatility. And this was up over 12% today. It is pretty rare to see this close 12% in one day, especially when the day didn't end up down, at least the S&P 500 down that much. That is, as you can see, we only fell about 1% in the S&P 500 and VVIX was up 12%. Typically, this is a sign of, first of all, potential more selling in the future, but also somebody is hedging here for something potentially even CPI next week, although it does seem a bit early to do that. We still have a week to go, so that's just my guess. I don't really know why we saw such a large move today, but this is something to keep watch on, keep it in your back pocket, and just be mindful because we haven't been at these levels, at least we haven't closed at these levels since all the way back in early October, as you can see from over here. And we haven't consistently been at these levels since around that September time period, which was way more volatility back then. So something is certainly up, seeing it break out of this range, or the previous range around the 70s to low 80s, and being in the mid 90s now is pretty substantial, especially with such a large update. So just monitor this, continue to see how it goes in the next couple of days, because that can give us insight on potential sell pressure in the future. Anyways, appreciate you guys watching this video, and I will see you guys next time on Sunday.